Ladies and gentlemen, you've been asking for it, so you got it. Today we have an absolute massive update with what's going on with the Australian housing market and also what's going on with the Australian economy. And people, what I've been watching over the past few months is the situation in Australia is going from bad to worse. We have a huge cost of living crisis going on right now, with groceries going up more than 15% per year. Energy prices are set to go up by about 25%. Rents are increasing 10 to 15% per year. And over the next 6 months, many people's mortgage payments are set to surge over 50%. And if you thought that was all, no everyone. HECS debt is about to increase, insurance premiums are going up, and the price for petrol still remains stubbornly high. But everyone, the reason why I've waited until now is I was waiting for the latest economic data and also the RBA, what they're going to do with the cash rate, and also the latest housing market data. And many people may be shocked with what I've found. So my fellow Australians, this is going to be a very important update. So let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, first things first I want to cover is this breaking news, everyone. Australia's economy cools as aggressive rate hikes start to take their toll. And guess what, everybody? The latest GDP data was well below what all the professionals were expecting. So look at this, everyone. Gross domestic product advanced just 0.2% from 3 months earlier, coming in below the estimates of 0.3% gain. And this is the weakest quarterly expansion since the third quarter of 2021 that sent the currency down a tad. So you can see with this chart here, everybody, it actually fell 2.7% in the third quarter of 2021. Then it rebounded, but we can see here the trend is every single quarter it's falling. In the first quarter it was 0.6%, and now it's fallen to 0.2%, and I expect in the next quarter we are going to be in the negative. But what you have to know is the way they record GDP. Say, for example, if GDP is positive 0.1%, well, we're not in a recession. But they say if we're negative 0.1%, we are in a recession. But if you ask many people on the street, if you go out there in the real world, the difference between positive 1% and negative 1%, it's pretty much the same thing, and people are doing it really, really tough. And what they're not taking into consideration here is Australia's inflation rate is still at 7%. So when you factor in inflation in real terms, we are going backwards. Yes, GDP has grown because the cost of everything is going up. But again, when you factor in inflation in real terms, the economy is shrinking. The report shows Australians again tapped cash built up during the pandemic, finance consumption as a savings ratio dropped. Household spending advanced to 0.2% in the first quarter, adding 0.1 percentage point growth to GDP. While everyone with the latest retail sales figures, I don't think this is going to continue. And also, if there's going to be more rate hikes, which I'll get into in a moment, they're expecting there could be at least 1 or 2 more, but I think the RBA is going to have to go much higher because nobody expected these 2 rate hikes, but people, they're going to have to keep up with the rest of the world and bring interest rates up to 5% if they really want to stop inflation. Spending on essential goods and services were the main contributors to the rise in household spending, while discretionary categories such as furnishing, household equipment, purchases of vehicles, and other goods and services all detracted from growth. So this is no surprise, everyone. The cost of groceries is going up. Every time I go to Woolies, I nearly get a heart attack. It seems like no matter how many items I get, it's still a minimum $100, even if I only get a handful of items. Again, we're about to get an energy increase, which I'll go over in a moment, of 25%, and people's mortgage payments are skyrocketing, so they just simply don't have money left over to spend on these discretionary items. Because if you want more evidence, Australia's retail sales were flat in April as consumers cut back on food and dining out. But what's all the talk of the town right now, what's getting a lot of property spookers very, very scared is the latest 2 unexpected rate rises from the RBA. Now, I've been very, very upset with the RBA because they've made a big, big mistake, and now us Australians are paying a massive, massive price. When all the other central banks were getting ahead of inflation, even though the Federal Reserve, I don't think, has done enough, but at least they lifted interest rates to 5% to 5.2%. New Zealand lifted to 5.5%. The UK and Canada, they've lifted to 4.5%. They tried to get ahead of inflation, and now their inflation numbers are actually coming down, even though they're still very high. But Australia's latest inflation figures are now spiking up again, and now we have the highest inflation rate. And guess what? Now the RBA is going to have to lift interest rates much higher than if you just lifted them up high in the first place to bring down all these people that are starting to run back into property after we saw a big market correction. So look at this, everyone. Australia's hawkish interest rate hikes explained in just 4 charts. And this is very, very good information here. So the Reserve Bank has also signaled that further rate hikes may may be required even as money markets are still refraining from fully pricing in another adjustment. Well, people, I think it's all but guaranteed, because if they don't, the Australian dollar is going to continue to crash. While many economists predict at least one more increase to 4.35%, others see the RBA is done instead, and they expect rates will need to remain high for longer. So all those people hoping that rates are going to be cut at the end of the year, that's not going to happen at least until late 2024. But this chart right here is what's getting the RBA worried. So the black line is the Melbourne Institute of Inflation expectations. They're still remaining a well anchored at 5.9%. And the red line here is CPI year over year, and we can see that's still very high at 7%. And another chart here to show what a big mistake the RBA made was hot prices. Australian core inflation remains higher than US and Canada. So we can see here the black, that is Australia's core inflation. The red is US, blue is Canada, and green Euro. And we can see in this area, we are above all of them. And on top of all of this, we're having strong wage growth for minimal age workers. Yes, they definitely need it. But people, unfortunately, this means inflation is going to be high for longer, because a lot of businesses are just going to simply pass on these costs to consumers. So another chart here, everyone, strong wage pressures. Another major factor for hawkish tilt is strong wage demand from labor unions, with the RBA highlighting that unit labor costs are rising briskly with productivity growth remaining subdued. Australian Industrial Relations umpire last week increased minimum wage covering around a fifth of the country's workforce by 5.75%. The RBA clearly acknowledged the risk from that decision by noting that the annual increase in award wages was higher than it was last year. Now, for all those who got that pay rise, I'm very, very happy for you, but unfortunately this will lead to inflation being stickier for longer. Yes, it's not going to add to everything, all the reasons why inflation will be higher, but if you want minimum wage, you're never going to get ahead, people. So if you want to get ahead of this inflation, you need to upskill right now, look for a better job. Don't limit yourself to minimum wage, because that's what it's called, minimum wage. You're never going to prosper, people. Start upskilling right now and take your financial goals right into your own hands. State governments are also ratcheting up wages of low-paid workers in their jurisdictions. Without productivity growth, which has stalled in recent years, such strong increases will not be consistent with a 2 to 3% inflation target. So okay, what have we got so far? We've got a cooling economy, interest rates are still going up, retail sales are flat, companies' earnings are going to be flat, unemployment's still at record lows, but it's starting to tick up. So that means this short rebound we've had in the property market right now, it is not going to last, people. But let's have a look to see what's happened with the latest housing market data. So we can see here, Sydney prices have gone up 4.8%, but that's because they fell 13.8% during the 2022 to 2023 downturn. Now, Sydney and Melbourne are normally the first to go, but they're also the first to recover. Also, this is just the average. What I'm seeing on the ground is the premium suburbs in Sydney go up. We call this a ripple effect in the property market. What happens first, the inner ring suburbs, they fall, the premium end of the market falls, then that starts to ripple out. What I'm seeing is a regional and the outer suburbs, they're only just beginning their downturn right now. And it's really the rich immigrants that are going to Sydney, buying these very expensive homes, that is lifting up the averages. We can see here, Melbourne's up 1.6% this year after falling 9.6%. Brisbane's up 1.8% after falling 11%, and the capital city average is up 2.8% after falling nearly 10%. So I know I did call for a downturn of between 20 and 30% in the housing market, but that's because I thought the RBA would do what they need to do, what all other central banks are doing. I thought they'll lift interest rates by 5% minimum, but they didn't do that. They still may do that, just a bit slower. And this recovery, or the short-term recovery we're seeing in the housing market from the premium end of town, well, that could be about to reverse. Because remember, all downturns don't just happen in a straight line. There's a lot of volatility, just like we see in the stock market. So I expect if we do get 2 more rate hikes and the immigration starts to slow down, or we don't get enough wealthy migrants, because again, it's not just enough to get migrants, you have to get migrants that have money. House prices, which have been falling and weighing on consumer sentiment, have reversed course rapidly, turning from headwind to tailwind. In May, they climbed for the 3rd straight month, with agents saying buyer demand has been surprisingly strong. And the reason why this is because all the property speakers coming out and they said, listen, the RBA, they've stopped lifting interest rates. Interest rates have hit their peak. They're going to start dropping them later this year. Well, they're all very wrong. We've had another 2 rate increases over the past months, and I think there's going to be at least 2 more coming. Higher house prices suggest that financial conditions need to tighten further, said Josh Williamson, an economist at Citigroup Inc., who upgraded his terminal rate forecast after Tuesday's decision to 4.6% from 5.35% previously. So what the RBA is doing is looking at the housing market, seeing it surging again. He's seeing financial conditions loosening, which is the opposite of what he wants. So he's starting to bring the hammer back down on property. But people, that's just the beginning. I've got so much news and data to show you that Australia could not just be facing a recession, but for many, this will feel like a depression. So like I was talking about earlier, everyone, look at this. Australia faces increased HECS repayments, energy bills, and health insurance premiums all at once. And when I saw these price increases that are coming out for the energy industry, I was completely shocked, and I know many pensioners simply aren't going to be able to afford this. So electricity prices will rise again from July 1 for households and small businesses in some parts of Australia. The Australian Energy Regulator last week confirmed electricity prices will increase by between 20 and 25% from July 1 in New South Wales, South Australia, and Queensland. So that's right, everybody, 20 to 25%. So you can't believe these inflation figures saying it's only 7%. All the essential items are skyrocketing at least 15% on average. It's really only the discretionary items that aren't going up, and that's making it look like the CPI is much lower than it really is. The increase is higher than the draft offer released by regulator in March, which set out for a 20 to 22% increase. But for Victorians, it gets even worse. In Victoria, residential customers and small businesses will see up to a 27% increase in electricity prices, according to the state's Essential Service Commission. Boy, oh boy, people, I don't know how people can take any more of this pain coming. They're already having their mortgage payments going up 30, 40, 50%. My mortgage repayments, they went from an interest rate of 1.9% to 5.99%. I'm paying an extra 65%. That's right, an extra 65% from what I was paying just 2 months ago. Now, luckily for me, I prepared for this. I'm in an okay financial position because I knew interest rates wouldn't stay low for this long. But I know many of my friends that went and took out these mortgages that they said, look, if I keep on getting overtime, if I don't have any unexpected expenses, if the stars align, I'll just be able to survive on interest rates of 2%. And now they're completely screwed. Now this brings us to HECS debt. So the loans being indexed in line with inflation rate of 7.1%, Australians with student loans face an average increase of more than $1,700 a year on their debts under the new rate, which came into force on Thursday. So this is just even more pain coming at the worst time possible, and this is going to mean consumers aren't going to have any money whatsoever left over after they're paying their mortgages. This means rents are going to go up because all these investors that see their mortgage rates go up, they're going to try to bring income in to keep their rental properties, and all these companies' earnings in Australia are going to completely collapse. And this is why I think the Australian stock market is so weak right now. So with the little money left that the average Australian has, they're spending it all on groceries, but now even groceries are becoming a huge financial burden for most Australians. Look at this. Find a consumer sentiment survey which found nearly 40% of Australian households said paying for groceries was a source of financial stress, double the number of the households who said the same in the past. About 40% of households say their rent or mortgage is a source of financial stress as well. And they're completely right, everyone. Food costs are skyrocketing. So look at this. Grocery prices up almost 10%, but certain items are up much more than that. So the price of food and grocery prices at Coles and Woolworths rose by an annualized 9.6% increase in April. The data, which has been disputed by supermarket giants, challenges the notion that inflation has peaked. The official inflation rate is at 7%, down significantly from a 30-year high of 7.8% for the December quarter of 2022. According to the report, dairy prices rose by 14%, including a 24% lift in cheese. So unfortunately, cheese is a luxury now, everyone, and an 18% rise in butter. Meanwhile, meat was 10% more expensive, with pork leading the price surge up to 16%. UBS tracked 60,000 products from both Coles and Woolworths, who control 2/3 of the grocery market. Again, people, every single Woolworths trip I take, it's just getting more and more expensive. Even just half a trolley now, it seems like it's at least $200 to $250. But this leads us to our next story. What we really need to talk about is Australia's huge rental crisis. Look at this, everyone. Rent in Australian capital cities climbs record 11.7% in just 12 months. Now, again, just to put it into perspective for some renters that think this is bad, again, we're going to see many Australians that own a house, have a mortgage, have their repayments increase by 50%. So you're going to see a lot of investors that have their repayments go up 50% pass this on to renters. Again, I'm not trying to say all poor property owners, I'm just stating the facts. So this is far above the average of 3.5%, and the record increase is equivalent to around $63 a week or $3,200 a year in rent. Sydney remains the country's most expensive capital to rent in, with the average tenant paying $711 a week up 1.3% in just the past month and up 13% for the year. Melbourne, where the average rent is $535 a week, has lost its position as the country's most affordable capital to Adelaide, where the average rent is $534 a week. So it's pretty much the same, everyone. So okay, we can see here by capital city how much is going up per month and per quarter. So Sydney 1.3%, that's nearly 15% annualized. Melbourne 1.4%, again that's around 15-16% annualized. Brisbane still going strong, up 0.7%. Adelaide 0.8%. Perth 1.3%. Hobart just 0.5%, not too bad. Rent's already crazy high there. Darwin actually falling 0.3%, as well as Canberra. And a combined capital city average up 1.1%, combined regional 0.5%. So again, all the essential items we need to survive, housing, groceries, and energy, is absolutely skyrocketing far, far higher than the CPI report, and this tells us the RBA is far behind the curve. But it's even worse in the rental market for people trying to get affordable housing. Sydney and Melbourne continue to see record strongest growth in unit rents across the capitals, with both cities seeing new peak rates of growth. Sydney units increased 19.1% over the past year, while Melbourne increased 15.2%. And unfortunately, there's no relief in sight because we're simply not building enough, and that's what we really need to do. We need to scrap negative gearing for old houses, but incentivize investors to build by having negative gearing for brand new builds, by having no land tax for brand new builds, and also getting rid of stamp duty for new builds. If they did this, investors will be building more and more houses and fixing the fundamental issue of supply and demand. But no, all these governments that say they have your best interests at heart, they all have huge property portfolios, they're all negative gearing, and they want house prices to keep going up because that's more stamp duty revenue for the government, that's more council rates for the councils, and that's more land tax for the governments as well. Relief was not on the horizon for renters. Medium to high density approvals remain well below the 10-year average. With approvals holding so low, it's likely we'll see a shortage start to accumulate in those medium to high density rental properties moving forward. So everyone, all this data tells me that Australia is not just going to be facing a recession, we could be facing a depression, and for many it already feels like one now. But I know you're thinking, well, okay, what can you do to protect yourself? Well, this is not financial advice to run, but what I'm doing is I'm diversifying into gold, silver, and Bitcoin because they've been massively outperforming the ASX. Look at this, everyone. The ASX is actually down 1.5% over the past 6 months. Meanwhile, gold has gone from around $2,600 per ounce all the way up to $2,900 per ounce, up almost 15%. And Bitcoin is massively outperforming, up 61% over the past 6 months. And the reason why gold, silver, and Bitcoin is massively outperforming the stock market is because the Aussie dollar keeps falling, because the RBA isn't keeping up their interest rates with the rest of the world. So if the RBA doesn't do what they need to do and lift interest rates to 5%, the Australian dollar will keep on falling, imports will become more expensive, inflation will get worse, and Australians will flood to gold, silver, and Bitcoin. And if you're wanting to know how to build wealth and invest in a diversified gold, silver, and Bitcoin portfolio, click the link in the description for my brand new course that's on sale right now, half price during the pre-launch. So my fellow Australians, what do you think is going to happen with the economy? Where do you think interest rates are going? What do you think is going to happen with the housing market? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.